Alright, hello and welcome to Camel Finance. I'm your boy Camel, and I want to start today by checking my ego. So I have been calling for a pivot in September/October since the start of the hiking cycle. So far I am wrong about the September pivot. We could well see it in October or November, but remember, I could still be wrong about this pivot in October. So FOMC in November could still see another hike. Maybe that is the last hike. We could well have seen the last hike. As you know, you already know what my bias is. The evidence does seem to be unfolding in favour of me being correct. We've seen the Bank of England, Korea, Japan, Germany all pivot. We've now seen, as I showed in yesterday and the day before's video, the UN, the IMF and the Bank of England are applying international pressure to the Fed to pivot. And now we have got no more rate hikes. Central banks are panicking just as expected. We're seeing the Australian interest rate decision come in below forecast. Okay, so this is starting to become a trend. I think, and I have suspected for a while, that this will act as some sort of contagion that will eventually catch on to the Fed. And of course, the question on my mind is, did the central banks just begin the turn of the hiking cycle with Australia's central bank lesser than expected rate hike? If you remember, we watched the other central banks ahead of the Fed to know the hiking cycle was beginning. So are we now seeing this thing play out in reverse? But it's important to remember that they still might not. Okay, so as a trader, you must have strong opinions that are weakly held. And I think this is a really important point to come across. It is my very, very strong opinion that we will see a Fed pivot, as I've been saying over and over and over again. But this opinion is weakly held. I will be more than happy to abandon this opinion if need be. Okay, so just remember that. Strong opinions as a trader that are weakly held. We must be flexible and unbiased. I've got this here. Have we seen the lows for the year in the S&P? Yes and no. Now, I think we have, okay? And I haven't clicked this yet, so maybe I'm going to be wrong about this. But I'm going to speculate before I click this that the overwhelming majority thinks that new lows are coming. And, it's even worse than I thought it was going to be. So 72.5% of people think that there are new lows still to come for the S&P. I've shown this chart a bunch of times. We know that this is more of a half cycle rally than a daily cycle low. We still would expect to see a drop into a daily cycle low, and if we maintain this downward structure, then it's likely that we would take out this low. However, I wouldn't be surprised if this is what ends up playing out, if this is what we're in the middle of playing out at the moment. So this would be holding the lows like this, but still having enough time elapsed to drop into a cycle low. So this would technically be slightly early. I think this would be day 35 or day 36. But this is kind of what I'm expecting to see. I'm not expecting to see this just crack and go. And I'm not really expecting a big downward drop, although I wouldn't be surprised to see either of those two play out. But one thing I do know is before we go chasing this move higher, we are, as far as I'm concerned, way too early to expect this to be the cycle low, and therefore I think it's too early to expect this to rally out of here. So I'm going to play a little bit more patient. When we get closer to this date round here, I think it's time to long. The contagion of the financial system is much more important than your view that more pain is needed. And by the way, the Fed always lies. So it's important to remember this. It's very, very important to remember this. The Fed always lies. Just because they keep saying that they're going to continue to hike does not mean they're not going to pivot any day now, or indeed any week now. Another point I wanted to make before we get into this is the coming Bitcoin bull run will last longer than the current bear market, and this is a statistical fact. According to T-Analyst, not according to me. Okay, not according to me. Now, what T-Analyst is referring to here is this 4-year cycle. And so that means that we go up into this bull market, this huge blow off top, then we spend a year in bear market, then we spend a year basing and slightly up, and then we spend a year after the halving in a raging bull market. Then we repeat this 4-year cycle. We spend a year in a bear market, a year sideways and slightly up, and then we halve at the halving and we have a full year bull market. Since then, of course, we have had almost a 1-year decline, and people are expecting this 4-year cycle to repeat in this same shape over again. That's what T-Analyst is talking about here. And as of right now, we're right around here. So as I've been saying, we're expecting this drop into the November cycle low. We are around a month away from this now, which puts us around here. So with the majority of the market expecting us to drop into this cycle low and then start to repeat this cycle all over again, where we start to trend up for a bit into the halving, get our post-halving pullback, and then we go into a raging bull market. There are 2 points I'd like to make about this. One is I think that's too easy. I think by now, by the time we get to here, where we are, just a little bit forward in November, then any idiot is going to be able to look back at this and say, well, this is what it's done 3 times over now. This is what's happened 3 times in a row. Why wouldn't it do this again? Markets don't work like that. They always are much, much harder to navigate. You can't just simply look back at a 4-year cycle and say, well, it's done this 3 times, it's going to do it a 4th time. I don't think this is very likely to play out in this shape. That's the first reason. The first reason is that this would be too easy. Now, if this was to happen, it would be easy and we'll get through that just fine. But I just think this is too easy and I don't think this shape is going to play out. The second reason I don't think this shape is going to repeat is because this is 4, 8, 12 years. We're about to enter the next 4, which would be a 16-year cycle. And a typical commodity 16-year cycle is made up of 3 right translated cycles followed by a left translated cycle. What does that mean? Well, it means that the peak comes post 50% of the cycle. It is right translated, meaning we spend more time going up than we do coming down. So said another way, in Bitcoin's case, it spends roughly 3 years going up and 1 year coming down. 3 years going up, 1 year coming down. 3 years going up, 1 year coming down. So what you would expect from a normal 16-year commodity cycle is for this to end on a blow-off move which is left translated, meaning it spends 1 year coming up and 3 years coming down. This would be the first true secular bear market for Bitcoin. Bitcoin has only had these bear markets spanning a year following on from a 3-year bull market. It's always done this, and so when you marry these 2 concepts together, one, that this would just be too easy if it were to repeat, and 2, that we haven't had a true secular bear market for Bitcoin. We've only had these bear markets within the context of a macro uptrend. Of course, I don't know what's going to happen. Nobody knows what's going to happen. But one thing I do know is markets are never this easy. They are never as easy as just looking left and saying this will happen again. Now, of course, as I've said already, if that were to happen, we will easily get through this. If this shape repeats, we'll be able to spot this a mile off. If we start to just trend up like this into the halving, get a pullback post-halving, and then we go into a huge parabola, well, that's really easy money, right? But I think people that are married to this idea, people that haven't got the idea in the back of their mind that we could spend 1 year going up and 3 years coming down, if you're not prepared for that, then I think quite possibly you are setting yourself up to be slaughtered. In addition to that, if I'm right about this, if we get this pivot and a melt up move where they let all of Congress out at the top, Bitcoin could of course decouple, but equally, what if it doesn't? What if Bitcoin continues to trade as a risk asset during this unfolding? This is a scenario that, again, I'm mostly calling for this scenario, but I did say in my last video, this is not in play yet. We need the pivot for this to become in play. We need to at least see some heavy advances from the stock market for this to become in play. But if this does morph, if the look of the charts morphs to become this sort of thing, then I think it's quite possible this will marry up to a left translated cycle for Bitcoin that then begins its first true secular bear market decline of 3 years. So I wanted to point that out because that's something I'm being very, very mindful of. I'm very, very mindful that we might not spend 4 years going up and we might actually spend under 12 months in a bull market. So it's important to just at least have that in the back of your mind so that you're not thinking, oh, I'm not going to sell until much, much later. I'm going to hold this for at least 2 years before I even entertain selling, okay? I think it's just very important to flag that because this sort of attitude is only going to set you up to be wrecked if that scenario does not play out. The banking giant Barclays has said it remains positive about the long-term viability of Bitcoin. Hedge funds are short at record levels. If they all get caught on the wrong side, it could lead to a massive short squeeze. So this could well be the fuel to see equities squeeze higher in the near term. At the same time, the Bitcoin price is now close to the estimated entry price of institutional investors who have been using Coinbase services like prime brokerage and custody, etc. If you still believe institutions drive this market, then this bull hopium could work for you. So you can see the red line being the Coinbase outflow, the outflow looking very, very similar to the bear market bottom of 2019. The income from tourism in El Salvador grew 52% in 2021, likely because they adopted the Bitcoin standard. And just in The global cryptocurrency market cap has reclaimed $1 trillion. A lot of people are getting excited about this little pump that we're having. Again, I still think we need to spend a bit more time basing, and then I think we are ready to start a massive, massive, massive bull market. I wanted to point out that gold is apparently coming in for that retest right now. So click this over one more candle. I'd like to see it hold this trend line and then resume off. That would be an entry for a long from me. As I've been saying over and over again, if we can't hold this line, then we need to flip short. I'm just thinking as well, a really nasty scenario, but I wouldn't be surprised if it was to play out, is if this turns out to be the bear trap, okay, then we recover and have a bull trap to the upside before then rolling over into that weekly cycle low. From a cycle count perspective, this move to the long side doesn't make sense. A move here where we sort of chop around for a day or two and then roll down, that makes much more sense from a cycle count point and from a weekly cycle count. So I think we should expect more downside. Is this going to end up being a bear trap, a bull trap, and then we finally go? Quite possibly. But I think what's important to note here is you just have to remember that we don't know anything. A trend line break of this has to be respected. Just like a trend line breakdown of this, we had to manage the risk on, right? Silver, maybe a little bit pushed, overextended. Got a breakout above both of these highs horizontally. So we'll see where this pulls back to. It just looks a little bit stretched in the near term to me, but who knows? There's an awful lot of people short silver, so maybe we're just seeing a short squeeze unfold. Already covered the S&P. I wouldn't be surprised if we see some sort of base and chop around here. I'm just noticing we could probably draw another line like this, and you can see this interacts quite well with those lines as well. So, but I think we need to wait a little bit more patience. Like to see a daily cycle low form, and I think then that becomes an entry from me. So not much longer to wait, just about a month, and then I think we get some really good entries off of this. And of course, a Fed pivot will see me jump in straight away. Same is true of the Nasdaq. I think maybe we'll see it work its way up to this trend line, and then sort of chop around for a bit before making a true bottom, and then we can go. UKX. Trying to pull back, looking for an entry on this. It's a bit stretched, so we'll see what can happen over the next coming days. Might have to let this one go. We'll see how it goes. Coinbase showing some relative strength here, but again, I still think it's going to do what Bitcoin does. I think it's going to sort of roll over and drop down in here. I think all the while we're below this level here. All the while we're below this level here, then I think it's probably a reasonable accumulation zone, but I'm going to be waiting to we get a bit closer to the 60-day cycle low for Bitcoin. And the same is true of MicroStrategy. I suspect this bounce will be faded and drop down into that cycle low, and that's where I'll look to load up, even if it gets super bullish and it moves up here, and then it will still get a drop down into that cycle low, and that should become the setup for the rally. Oil here hanging on, so we'll see. Hopefully we get a retest of this downward slope here, and that would be a perfect entry for me. But if we just sort of chop around and go, then we could move this up to here and have our entry something like that. So keeping a close eye on that. Longs coming from me in the near future, I would think. Bitcoin, you already know the story, right? Chop around a bit, drop down into this cycle low and go. I'm not super excited by this price action. I know a lot of people get really excited by this, but we've seen all these moves faded, and given the cycle count, you know, we know this cycle low is coming into focus, so any move in here I think negates. I think it's negligible. We'll just wait for that drop down, and then we can long out of there. Same is true of Ethereum, just using Bitcoin as the proxy, or Bitcoin as the indicator. Once we reach that cycle low for Bitcoin, I think that would make sense for Ethereum to emerge. XRP trying to work its way to the top of this pennant, so we'll see what can happen here. Long and strong, continue to push. Dollar. I noticed something interesting on the dollar. I want to show you this. If I draw a trend line, first of all here, okay, there's one angle, one slope. Then if we take this bit here, there's another angle, another slope here. And lastly, we can do this again from here, like that. So zooming in on this, you can see we've had 3 angles of attack. Let me clean this chart up a bit for you. Okay, so you can see here, now I've cleaned the chart up, we've had our lead-in phase, an advancing phase, and then what could be a blow-off top for the dollar. We have since then broken down. So are we going to see a retest and resumption? Is this just going to base and bounce off of this trend line here? That remains to be seen. In the meantime, though, I would say this is our first warning sign. If we can then break down from this trend line here, I'll color this one red. If we break down from that trend line, I would say that there's a very good chance that we could call this the top of the dollar. So that remains to be seen. 120 still in play unless we lose this trend line here, this red one. So keeping a close eye on that. But if this is going to sort of chop around and then break down, then you would expect risk to come on very, very strongly and rather quickly. Take a quick look at the chart of truth. Here we go, coming in for that retest. So is it going to reclaim, and is it going to suggest that we are going to see more hikes from the Fed, or can we do something like this where we retest and then resume down? If so, that could indicate that this is the top of the yields and possibly that we won't see any more rate hikes from the Fed. So all eyes on the chart of truth. If you found value here today, I'd appreciate it if you could drop a like on the video. Subscribe if you're not already. Go ahead and follow me on Twitter. Throw down in the comments if there's anything you want to see from me. And until next time, take care. All the best. Cheers. Bye.